A pre-IPO or pre-initial public offering stage is when a private company is getting ready to become a publicly traded company. Now, during this time, the company will offer to investors, private investors, hedge funds, friends and family, shares in that said company at a lower discount from the initial public offering price. For example, if a company's IPO is set to be at around $10 a share, you can expect the pre-IPO price to be at around $4 or $5 a share. There are usually three ways for companies to show a profit to their shareholders. One of them is an IPO, which is an initial public offering, which is a listing of a company on a stock exchange. The second way is through a reverse merger. That's when a private company gets bought out by a publicly traded company, which means that the shareholder itself will be receiving shares in the publicly traded company and will be able to sell them. And the third way is through a stock buyback. That's when the private company buys back shares from their shareholders at a premium, an increased price. Now let's take a look at some examples of what to do once the companies that you've invested in privately as a pre-IPO shareholder do when they go public on the stock market. Okay, so let's look at some examples here. You've got Facebook. That was a pre-IPO at $3.50 back in 2005. Went public at $36 in 2012. So you had to wait a few years before you saw a profit. But between 2012 and 2014, the company didn't do very well at all. I mean, this is the price of $86 per share here is stock split adjusted, but the company itself, the price went down to $16 per share for 2 years, from 36. So it was a pretty disastrous IPO, but not for pre-IPO investors, because at $3.50 you were printing money all the way. So obviously there's been some stock splits involved here, and the company has done great. Another example is Amazon. Amazon was a pre-IPO at $7. The IPO was at $18 per share, and we saw a price here of 183. But here the company, you'll see that they did a 20-for-1 forward stock split, which means the price prior to this split was about $2,300 per share. So for every share that shareholders had, they were given 20 shares on top of that per share. And now you see a nice little trend resuming here since the split. It went down a little bit, but then started coming back up to different levels, which is all very good for investors. Now in 2023, there was a company that just went public. The pre-IPO, that was High Tech Global. Pre-IPO was at 2, the IPO was at 5. No much action here, consolidation here. Price hitting $31.50. So it's important to, once you invest in the pre-IPO, it's important to see and be strategically aware of what you're going to do with your shares after the company goes public. That's why it's good to be able to diversify a little bit and to take some of the shares that you bought at the pre-IPO level, sell some at the start of the IPO. In this case, $2 to $5 by 31. It's probably a good idea to sell maybe a third of the position and keep the rest as long as charts and candlesticks look good and we start seeing momentum and things like that. ISPR Technology was an IPO at 250. Pre-IPO at 250, IPO at 6. Yeah, I mean the IPO at 6 here, we see a high of around 938. A lot of selling volume here, but again, the range for the day was 685 to 938. At 250, you were still at 300%. Here you're starting seeing the price at around 972. But this is just a new IPO, just came up just came out this year. GNLX, same thing. I'm just looking at a couple of 2023 IPOs here. Pre-IPO at 3, IPO at 7, high 794 on the first day of trading, followed by some good momentum here with those candlesticks. And we saw a high of $33 per share and 25 on the low. Here, some consolidation and retracement of stock. A good stop loss at the price of around 30 would have been great here, which means 10 times your money from $3 on the pre-IPO. Atour Lifestyle Holdings, IPO at 6, IPO at 15, pre-IPO at 6, a high of 27. Again, this is a 2023 IPO. Not much to talk about. Candlesticks here, for example, you would put a stop loss here around this price here, in the middle of the momentum bar, green momentum bar on the left, and try and take some profits. This is let's have a look here. We have consolidation here. So not much to do here. Stop loss here would have been great, and wait for. I mean, the bigger bearish bar candlestick here shows that there's a downward momentum. It would have been probably a buy order, a rebuy back order around here would have been great on the second tick of the big bar, showing that there's volume coming in and buyers pushing prices a little bit higher. Okay, Alibaba. That was an interesting one. That was a pre-IPO at 60, and it was an IPO at 90. Went as high as 300 plus $9 a share. I don't see any stock splits here, but maybe it's not showing. All right, so yeah, the first couple of days of trading, we saw the high of $114. Nothing much here, just consolidation, I think, as well, just nothing special. And then pricing was starting to break out and move up a little bit higher here, trend and resistance and support. Now let's come to cryptocurrencies. Ethereum was $314 when you were able to participate with it. It went as much as $5,000, and Bitcoin was a $300 investment back in 2000. Well, we go back here. So yeah, 2014 or something like that. Maybe even earlier, you would have been able to buy it for much less. But the problem with that is that the volatility on this type of cryptocurrencies is extremely high, and that's why I'm completely for asset-backed cryptocurrencies or tokens compared to what we have here. So the point is this: is that when you have when you're investing in an IPO or a pre-IPO, and the company goes IPO, it's important to know what you're going to do with your funds. It's important to look at technical analysis. It's important to have a look at candlestick patterns, what they mean, and to maximize the gains that you make as an early investor. It's useless taking a position from a pre-IPO at around 5 and selling it on the first day at 10, because you'll just kick yourself a little bit later, especially if the company's fundamentals are sound. So yeah, just a little bit of information as to what you can do with companies that you own as a pre-IPO shareholder, and see what you can do with the companies once they go through a stock market listing. That's it for now.